If you are a founder still doing $15 an hour tasks, or if you're in a leadership position and still doing $15 an hour tasks, and I know you are losing money, not just time. You are losing actual real dollars in your bank account at the end of the day. And I can prove it in about 3 minutes. Look, here's a number that most service-based founders don't calculate until they're doing 7 figures or above, and that is your utilization rate. And once you understand this, you are never going to look at your business the same way again. Utilization rate is the number of hours that you or anyone in a leadership position in your business is spending on actual revenue generating activities. So not those administrative tasks, not that operational busy work, or frankly, anything else that someone else should be doing. That's it. It is a very simple ratio and a very simple number to calculate. But what it reveals about your business is not so simple at the heart of it all. So here's the formula. Utilization rate equals the revenue generating hours that you're spending working in your business divided by the total number of working hours you're spending working in your business times 100. And again, you can run this for team leaders or project managers on your team. So an example of this is that you have 20 billable hours that you've actually spent, again, on those revenue generating activities like servicing your clients, divided by 40 total working hours in any given week. And you multiply that times 100. That gives you a 50% utilization rate. Most founders that I work with, they think they're running at like a 70 or an 80% here. Like you're spending 70 to 80% of your time in actual client delivery and client service work. When you track it, you're only actually spending about 40 or 50% or even less of your time in those activities. And that gap is often filled with tasks that have nothing to do with the work that only you can do, or any of those actual sales activities that you need to be doing in the beginning phases of your business. So before I show you the actual math here, I need to set two numbers with you. First, your time is worth at least $150 an hour. That is just the minimum. I'm not talking about what you should be charging clients. I'm talking about what your time should be calculated as a cost to your business. Because look, you're the visionary. You're the head strategist. You're the judgment call, the lead decision maker. You're the thing that can't be replaced in your business. So every hour that you're spending on those $15 an hour tasks is an hour you didn't spend on those $150 ones that really move the needle forward on where you want to go. That gap, that's $135 an hour gap. Again, minimum. Your VA's time, instead, it's worth about, well, I wouldn't say it's worth, but the cost is about $15 an hour to you. That is the fully loaded cost of a well-supported offshore executive assistant in this example. So when you ask yourself, should I be doing this work or should my executive or virtual assistant be doing this work? But the math is going to answer the question for you. So let's take a look at the math here. Your hourly rate should be calculated as $150 an hour as an actual physical cost that shows up on your P&L statement. Your VA's rate can be anywhere from $10 to $15 per hour. The cost of the founder doing that VA work and continuing to do it, that's $135 per hour that you are actually wasting in your business. I would say it's actually exponentially more because once you leverage your time to produce additional assets or things that can actually grow your revenue, other factors can come into play. So let's take a look at what bad utilization looks like. So if your total working hours, I know they're a lot more, but if you show them as 40 hours a week, you spend about 20 hours of those in high value billable hours, and you spend the other 20 in admin, ops, or other things that you could easily hand off to that $15 an hour person, your utilization rate is about 50%. And that's just probably on the low end. Let's really face it here. The value you generated during this period, let's say it's $3,000. So 20 times 150, that's $3,000. The cost of the admin hours at your rate is $3,000. That's $3,000 that you've actually lost. So what those hours would cost with a BA or an EA in this role is about $300. So your weekly opportunity cost in this scenario is $2,700. That's just the opportunity cost. That doesn't count anything that you could have generated in those 20 hours to actually increase your overall revenue that exceeds that $150 per hour. So just think about it in terms of that $2,700. That's the baseline. Now let's take a look at this same 40-hour work week, but with your time deployed in more highly valued areas. So if you hand off that 20 hours of admin work to your VA, that's going to cost you about $300 a week. Yes, it seems like a lot in the beginning, but it's not a lot in the long run. That's going to actually free up at least 10 hours of your time for high value work. And now, because you don't have to spend as many hours recovering from that admin mental drag that happens when we're doing things that we don't like to do or that seem like a waste of our time, it's actually going to provide more gains to you in the long run. So at $150 an hour, those 10 freed up hours, they're actually worth $1,500 in productive capacity. So now you've spent $300 and you've gotten $1,500 back. That is a 5x return on the investment in a VA before you've even accounted for any additional revenue. When you use those numbers against your client revenue, so what you're actually bringing in per client divided by the total number of hours that you or your team spends on that client, you can start to see your actual margins in your business really grow and expand. That's not the top line number. That's not your revenue. That's the number that tells you whether you're building a successful business that can really support you, support your life, and grow into the future. Not the number that's just buying you a job or telling you that you're generating some money, but you don't know where it's actually going. Your utilization rate is not just a productivity metric, although a lot of times other founders at a higher stage in their business actually do use it in this way. But really, it's a profitability metric. And most founders, they never take the time to actually calculate it or think about it. So what can you do with all this information? Well, first, I want you to go and calculate your time. Calculate the number of hours you're spending in administrative duties, operational duties, and on other areas of your business that you shouldn't actually be in. Then calculate the number of hours that you're actually spending in client delivery and in CEO work. Don't estimate it. I want you to actually track it. You can use a time tracking app or another means to, you can use a pen and paper if you want to, but go ahead and track it out. Secondly, I want you to start to sort your activities into two buckets. One, CEO and client delivery work. The other, everything else that you're doing with your business that eventually you're going to actually hand off. I want you to start to put some numbers to the things that you're spending your time on. Third, I want you to run the actual math. That's your utilization rate. And that's your case for making that first hire for your virtual or your executive assistant. Or maybe it's the case for making the next hire to support the team leaders that are already in your business so that they can maximize their utilization rate, which will increase your margins in the long run. Look, you don't need a spreadsheet. You don't need a consultant. I can help you if you want to reach out. But what you need is just 1 hour of honest tracking and about 20 minutes of doing the math. If you do want someone to do it for you, my 3T's audit is linked up in the description box. It will do the math for you and it'll help you decide where you need to start assigning out tasks that you should no longer be doing. And while you're there, go ahead, click that subscribe button because my next video in this Founder Math series is going to show you how these numbers actually affect your overall client experience and your gross margins, both by client segment, and in your business as a whole.